All right, hey guys, Tyler here from Seller Accountant. And what we're going to do over the next couple weeks is talk about how cash is king in an e-commerce brand selling or e-commerce reselling business. And everyone's heard the adage, cash is king. It's true. It's never been more true, especially as things are weird right now with COVID-19. But for every business, while it's important for every business, it's especially important for e-commerce businesses because of how long the cash cycle is. And so I just wanted to point out a couple of things here. First of all, the dollar sign with the arrows. This is going to be our first topic here, is to define what a cash cycle is. And let me just tell you really quick. So the cash cycle is the amount of time or the process by which money flows into your business and flows out of your business. It is circular. You're going to place some kind of investment in your business. It's either going to be capital that you put into the business, or it's going to be debt, or it's going to be an investor that places money into your business. And your job as the business owner, as the person that wants to make a profit, is to take that precious capital, that precious cash, and turn it quickly enough that you can, invest in the product you're going to sell and then get to keep a portion as profit. And so that's what we mean by cash cycle. How long does it take us to turn our inventory? That's what we care about as an inventory-based business, is how long does it take us to purchase the goods, have them show up in a warehouse, run our sales, run our advertising, and then get our cash back. What is that cycle? So that's what I mean by cash cycle. The other thing I'm going to talk about in this first introductory video is this idea of AR and AP. If you're feeling a cash flow crunch in your business, your accounts receivable and your accounts payable is probably the lowest hanging fruit, the first place you should consider looking, because those are normally areas where you can find money really quickly. And so what we mean by accounts receivable is this is what people owe you, right? If you're an Amazon seller, for instance, you're going to have that 14-day cycle. Well, once you're up to day 12, Amazon has a pile of your money that they're holding on to for you, right? Or you might be selling directly to bricks and mortar shops or to other resellers. And so you might have some accounts receivable out there. Or if you sell through Wayfair, they have certain terms, and Walmart tends to have 90 to 120-day terms, right? It just depends on your sales channel. But anything I can do to reduce the number of days of my sales that are outstanding, anything I can do to make it to where I've collected on that AR as quickly as possible, obviously speeds up that cash cycle and helps my cash flow. Now, the opposite is true, and frankly, this is where we have a lot more control often as supply chain buyers, is in the AP, the accounts payable side of it. And so anything we can do to prolong the payment cycle to our vendors, to the suppliers who are manufacturing our products or that we're securing our products through, if I can get an extra week or an extra month on terms for them, that has the opposite effect. That allows me to keep the cash in my business for another week or another month, therefore improving my cash flow position as a company. And so sometimes the lowest hanging fruit for any company, especially larger ones, is to do a careful review of your AR and AP and make sure that you've optimized both of those relationships. You're collecting money as quickly as possible, and you're paying out on slower terms, and sometimes you want to slow that down as much as possible. Now, over the next couple of weeks, I want to talk about working capital. I want to talk about the impact of gross profit and post-advertising gross profit. I want to talk about debt, overhead, and then how to be proactive, how to get in front of the clock in terms of planning your cash flow. Stay tuned. Can't wait to talk to you about those things. See ya.